Tesla stock has been on a tear, and we've had some pretty irrational ideas about it from folks, both pointing much too high and, of course, as always, much too low. If we want a real nuanced, balanced take, we're going to have to talk to Herbert from Brighter. He's going to make us precisely that, God willing. We'll find out. But we're going to look at some of the many upgrades, talk about why it's happening, why it should or shouldn't happen, and how long this can go on. I'm Brian. Welcome to Futuraza. Well, first of all, good morning, Herbert. So great to see you.
Good morning.
As always, we've got a whole bunch of stuff coming up. We've got the shareholder vote. We've got new products galore. We've got a shareholder meeting, the annual shareholder meeting coming up in November. You and I will both be in Texas for that. Soon we'll find out if we have tickets. So fingers crossed. Hey, I was looking at the news and I couldn't help but notice Tesla wins higher price target. This is from this particular one is from, let's see who this is, Piper Sandler, raising the price target to 500. They had a chance to go out there, see the operation in China. They found it very encouraging, and they're not alone. Mitsuho raises price target as well to 450. Very, very brave and courageous to show a number that's just outside of where we are. Outperform by Baird. They're raising their price target as well to 548. At least that's technically higher than today. And we're seeing this everywhere we look. This is Ben Callow. And I mean, it's everywhere you look. What's going on? Why are we seeing all these target increases?
Well, there's obviously the answer is that the stock went up. When the stock goes up, they follow. That is the reason. But what's interesting about these ones that you picked, they are jumps of $75, $100, $100+. It was crazy jumps. And if you calculate what that means, it's like all of a sudden the stock is now worth, right? $200 billion more today than it was yesterday. It's ridiculous. But the more important ones is Baird, 548 or whatever that number was. It's like that is the highest, 538. It's now the highest price target on Wall Street. Used to always be Dan Ives at $500. Surprisingly, he kept his at $500, but 548 from 320. Now, the key word, of course, is physical AI, real world AI. You and I and many other Tesla investors have been talking about this for a year. Oh, what?
Yeah, you're in the article.
I'm in the article. Thank you.
Well, that makes you the expert, so I'm glad we got you on.
Sure. I mean, just repeating it. But, that's the key, the critical thing is that they're now saying that Tesla is a physical AI company. So what's interesting in that we see these wave of institutional analysts raising price targets. It started when Elon started to, invest $1 billion. When the definitive proxy prior to that was the preliminary proxy dropped, and you can see his plan, 2025 CEO performance plan. Everybody I've not yet seen, knock on wood, anybody come out and says, this is not likely that Elon will hit these. Even though they're stretches, they're incredibly difficult things to hit. Most of these institutions are coming in going, I think Elon will hit these. And they're very positive about it. Yeah.
So that's the crazy part. Of course, on social media, we see every reaction. We see people saying these are difficult but attainable. I think that's you and I. We see people saying these are impossible, to which I say, great, vote for it, and he'll never get paid. You'll show him. And then we see people saying, well, these are so easy, they're already slam dunks and done. And we know that's a lie. Because crazy. If it was, how come no one is putting price targets that would even allow Elon to get the first tranche, let alone all of them?
That's a good point. And so why, 548, 500, these are great numbers because, finally it took us forever to get past the 400. But again, they just follow stock price. That's the difference, right? When instead, only a few, that's why Dan Ives is very comfortable saying, okay, it's 500. He does some of the parts where he looks at all the businesses, including Robotaxi, including bots, even before they're a product out there, And he says, okay, if it happens within 10 years, here's how big the market's going to be. Here's the cash flow for Tesla. I'm going to put a probability of likelihood that that will happen. And you bring it back to what does that mean today's stock price meaning? That's how you're supposed to do it. These guys, they don't do that. They're just going, Tesla's a car company, Tesla's a car company. Oh, damn it. I now have to add energy because they've got the energy is now 5-10%. Oh, that's when I add energy. Okay. And then, no Robotaxi, no bots. Now they started adding Robotaxi, and then none of them have added bots yet. That's the interesting thing. Now, this Baird finally says, okay, Tesla's a physical AI company. That's where, okay, they're buying into that and they're understanding that's the way you need to look at this company now.
It's ridiculous. With energy, you're right. I'd asked Matt Smith years ago, why is no one on Wall Street including energy, stationary storage in their valuations? And he said, has to show up on the spreadsheet. I said, it's on the spreadsheet. He goes, it's got to be bigger. And sure enough, 3 months, 6 months later, they started including it. But that's too late to catch the wave. You can't drive forward by looking in the rearview mirror. You're going to miss every bend and twist in the road.
So, a point I want to make though is so when I looked at all the list of the institutional analysts and what they're saying, I'd say still about 50% of them, if not even more than 50%, do not refer to Tesla as an AI company, as we were just talking about. They still think of it as an auto company, and they attribute the jump in the price to the high Q3 delivery expectations. That is still the main driver of why the stock is going up, which is good news for us. Right? It's still good news.
I don't think it's any news at all because I do not think these analysts know what they're doing. I think if you think it's just a car company, you should tell people to sell, because it's not worth this much as just a car company. That doesn't make sense. But if you're going to factor in these other things, you got to actually count them, is my thinking. But what do I know? I mean, I've beaten the returns of all of their funds since investing in Tesla with this one simple trick. Wall Street hates it. Buy and hold. So
exactly. I mean, we've had this discussion, so many people, why do analysts do what they're doing? And we understand, that they're doing it for just trying to make sure that they hit the number properly, and they'll just follow it. Right. And that's the thing. I think you should not be allowed to change your forecast anytime you want to, because then they'll just keep changing it until it gets to as close to the price it ends up being at the end of the year, right? No matter what their initial was. But the thing is, it's still true that as much as we retail analysts goes, none of this matters. None of this. That's not true. It does. These guys don't know what they're doing, but the average investor listens to what they say, more so than us. So that's why you do want to see this change. And the good news is that you have companies like Morgan Stanley, who's well respected. You have Piper Sandler, well respected. And as they make that change, it drags out all the others who are not really following the company at all. And they just because they're following so many companies, they really don't know Tesla at all. And then they just, these guys said it, so let me try to copy it. So it just drags the whole industry up.
So yes. So some of them are following the market and the others are following the guy next to them. An interesting point. Last year we saw, I think it was over the past year or last year, we saw 22% of revenue was stationary storage. We know Shanghai has just gotten online this year. We know Dallas will be online next year. Houston? Wait,
it's already 22% of revenue?
Isn't it?
It's like, I thought we're past, I think we're still at 10%, but okay.
Oh, okay.
That's a lot.
I'd read.
I don't know if I'm using earnings or revenue, but yes, I think it's revenue. I mean, we're 100 billion revenue, and I think we had 10 or 12 billion of.
Okay.
Energy.
It might be on the margin then, but at any rate, it's a substantial amount, and it's going to more than double next year.
Yes.
Reasonable.
Remember that we had that one. There's this conversation I was having with somebody on X, and then they said, I know already that it wasn't my statement. It was somebody else's statement that Tesla's energy going to double, triple. His answer was, that's so unreasonable to say that, right? If you had said 25%, I'd believe you. But now you're double, tripling. How would you, like, It's pretty easy. They're doubling and tripling their factories. They've already built the factory, and that's going to be equal to the size of Lathrop. And we know that it can be done within 9 months to a year. So, like they didn't even understand that there's new factories that are going to double production, therefore double sales. They can't understand that energy could actually double and triple in the next year or 2 years.
Right. If you have a car wash with one stall and a line all the way out to the street, adding a second stall is probably going to double your revenue. So I think that's pretty reasonable to assume. Is this going to stick? Q3, let's say we have great numbers, let's say earnings and all that, and the deliveries look good. We get a good bump. Is it going to stick in Q4, in Q1?
We know what they do. If stock falls by 100, they'll all reduce their price points at that point. If the stock jumps by 100, they'll go do another $100 jump. Right, $250 billion extra in the company's valuation. Why? And then they'll come up with an excuse, as opposed to saying, right, there should be a certain price that you do already today. And when Certain Basher does this, it ranges anywhere from, depending on how you value future cash flows from robots and Robotaxi, and you bring it down today, it could be over $1,500. That's what the stock price should be today. Now, you should put some discounts to that. You don't say that we're going to win the entire market. You're not saying that it's 100% chance it's going to succeed. You bring down your conservative numbers. It should still be over $500 today, $600. But that's what it should be, right? But I have to have a lot of trust in that.
I had told a friend of mine once, I only need Tesla stock to double twice in order for me to have enough in my retirement to pay off my house. And he goes, that you understand that's a big ask, right? That's not going to happen. And he was wrong. You do at some point run out of how many more doublings are there. I did see someone saying that we could see 10 trillion this year. And I said, I think that's too high.
Yeah.
I think a market cap of 10 trillion that's never been seen before this year is too high.
No. It's you've got to get the robots, over 1 million robots, and then you got to get to 2 million and so forth. And that's when you get to those crazy numbers. But the point is that if you've studied it, you follow it, how likely are they to create 1 million robots, which is Elon's target, by the way, and in what year? So I just did a show with Certain Basher, fantastic show. People should watch it. And we took a look at every one of his operational milestones that Elon has to hit. What's the likelihood he'll get 1 million robots, 1 million robotaxis? What's the likelihood he'll get 20 million vehicles sold overall? Each one of these. And he mapped it out, and many of them are 2028, 2030. And that's the good news, I think, because in 5 years, we're not talking 10 years, which is how long his plan is for. Each one of these could actually reasonably might happen in that time frame. So,
and I think none of them will happen in the first year. Even if the stock valuation, if the market cap increases to the first tranche level, the operational milestones are much bigger. And to anyone saying, well, this comp plan is a joke, we know he's going to hit these. My friend, if you know he's going to hit them, you have a buying opportunity in front of you. I don't know he's going to hit them, but I have confidence. I've met enough of the engineers. I've talked to them. A question I wanted to ask you, and this is a little bit more of an Alexandra Mertz question, is now that we're seeing more more institutional analysts coming in, it used to be that institutional was very underrepresented for such a large company, and now they've been catching up, but they are still not at the levels we see for perhaps Walmart or Costco. Is that going to help smooth out the stock value, and is it going to help drive it up as they try and get to the kind of percentage of ownership that we see from other companies?
Yeah. So exactly, there's this beautiful chart that I think still exists today, right? Which is if you take a look at the largest companies in the world, what percentage of institutional analysts, big whale investors invest in that company, and what percentage of their portfolio they invest in it. That's the X and Y axis. And Tesla's at the bottom left quadrant, which is like both very, very low compared to everyone else. That is still true today. But what has been happening in Q4 of last year and Q1 and Q2 of this year? Institutionals have been buying big time, to the point now that it's flipped. It used to be that retail investors were the majority, and now it's no longer the majority. Our retail amount is falling compared to I think that they're over 60% now, and we're like the 40%, 45% of the shares is owned by retail. Having said that, Tesla is still the number one most held retail shareholders. There's 10 million retail shareholders in Tesla stock, and that is more than any other company in the world, including GameStop, these meme stocks that were out there. What does that mean for votes? It's this is what we're making sure that it works. But there's some institutionals that are friendly to Tesla, and we know for sure they're in, like Vanguard, Fidelity. We think that they're already, they're going to be voting in favor, and that's going to be helpful. But the good news is that this particular vote in November 6th, the most important proposals, because we moved to Texas, the Texas corporate law only needs 50% plus one for it to approve, as opposed to 66%, 2/3. And because of Texas law, Elon and Kimball's shares can vote in those proposals as well. And so just that alone, we feel very confident that there's the retail, and then there's going to be a few of these big whale investors that are friendly to Tesla. It should pass. But having said that, we still need every retail investor to vote and make sure that we nail that. So there's some good signs that that's going to happen.
I have high confidence on some of the top level vote items. I'm not sure how the vote will go on the others. I don't know how strong opinions are. I don't know any part of what Wall Street is thinking and what they will do with their shares. If you have shares, do vote them. Even if you disagree with me or Herbert or Alexandra or anyone, no matter who you agree with, you should still vote your shares, because if you don't, rest assured the Wall Street guys will absolutely be voting their shares. They don't all agree with each other. They're not always in the same camp all the time. So that's worth noting. Guys, what did we miss? What did we misunderstand? Leave it in them comments below. Head over to Brighter, find out what Herbert's up to. He has some great guests all the time. And everybody else, stay tuned, stay juicy, and I cannot wait to hear from you clever robots. In the wealthy, wealthy future, we all will certainly enjoy.